Don Luskin, let me just begin with you. Is the United States and the G20 finance ministers and all the big countries, is there a world war being waged against currency value and money?
Well, what's happening is all the governments of the world, to some different extent, different from one to another, are all basically having to spend and inflate their way out of the global recession and the global credit crisis. And they're going to have to keep doing it for a long time. So they're not deliberately waging war against the value of their currencies. They'd love to have strong currencies, I suppose. But what else can they do? They've just got to do it. Otherwise, the world sinks back into recession. That's why I say gold 2000.
I mean, in your judgment, we'll get everybody in on this, is that the real reason for the rise in gold? The gold's been basing and creating strength, and now it's exploding. The G20 is meeting. They got a preliminary meeting in London. Then they go to Pittsburgh. The head of the IMF was on the tape today in the Wall Street Journal saying no exit strategy. Is this what's driving gold? A massive monetary expansion, no links to gold, no links to currency value anymore. We've thrown discipline out the window, Don?
Pretty much. I think you're slightly off kilter to blame the G20. I think what you really want to blame are the central banks. It is clearly the avowed policy of the Fed and all the rest to stay easy forever. Right now, the Fed fund futures, looking a whole year ahead, are only looking at the Fed funds rate going from 0 to a mere 70 basis points. That's the lowest the funds rate has ever been a year ahead in history, even lower than at the very worst of the credit crisis. I guarantee you the Fed is going to be on easy forever, and they don't care about inflation. You know what they care about? They care about deflation. In their mind, deflation is a crisis. Inflation is a mere problem.
Well,
So they'd rather have a problem than a crisis.
Well,
Money on the
seems
sidelines.
too simple to me, Don Luskin. At what point does this incipient inflation from the world war against money and the jump in gold, this incipient inflation, turn around and get real and just bite the stock market in the ass? At what point does that happen?
I think that's going to happen quite a ways out, because the conventional wisdom is absolutely stuck on the idea that you cannot have inflation if you have a 9.7% unemployment rate. So inflation is going to be a very big surprise. It's going to have to be a very big, visible headline to shock the conventional wisdom into seeing it. And then and only then...
Well, can that happen? Can you have it? Let's say you go to 10% on the unemployment rate, Don. Can you get, let's say, a 3, 4, 5% inflation rate at the same time? The Fed says you can't. What do you say?
Well, of course you can. We just merely have to remember the very high unemployment rates we experienced during the 70s at the same time as we've had very high inflation rates. On the other hand, the falling inflation rates and unemployment rates that we had in the 80s and the 90s. So that whole idea that there's that lockstep relationship is completely disproven and spurious.
Jen gave a thumbs down to stocks at the T's. What? Give me your reasons. You're not buying stocks.
Well, only because we're recovering from a recession right now. We're not recovering from a depression. There is just no precedent whatsoever in stock market history, except for right after the very bottom of the Depression, where stocks did any better than they've done in the last 5.5 months over such a short period of time. We are exhausted. We need to take a rest. We need to have a correction. We need to get people scared a little bit again. There's too much of a consensus that we're going to have a run for the roses. You know, next year, let's talk. But for the rest of this year, flat to lower.
Flat to lower for the rest of this year. How much pullback, Don Luskin? This is very brave of you and very realistic. How much pullback?
Oh, I'd say 20% ought to get the adrenaline going a little bit.
20%. All right, fellas. Dan